Pradeep Kumar Das, CMD of IREDA is ready. Mr. Kumar, good morning. Thank you for joining us. Reserve Bank of India has now laid down guidelines for project finance. Can you tell us how much of your loan portfolio would be categorized under such project finance schemes?
First of all, let me tell you that we are a 100% project finance company. In our total loan portfolio, more than 75% essentially we need to keep in project finance, being an infra-category registered RBI NBFC. So, any point of time, essentially our project finance will be strictly 75% and above. So, we have a small portion of maybe around at times 15-20% towards short-term funding against the balance sheets, that is towards their short-term funding cash flow requirement. That is essentially for clearing the overdues against the RE outstandings. But we are by and large a project finance company.
All right. Along with that, give us some sense that how much does the project finance guidelines by the RBI impact your business? How much will it impact the incremental credit growth going forward?
See, I do not think at all that that is going to impact the incremental credit growth. Let me clarify that. So, if you recall, when the RBI draft guidelines was announced, there was a lot of hue and cry. And if you can recall, I had spoken during that period, the regulator is going to have considered view by taking stakeholders' opinions and all. Even we are one of the important stakeholders being steering the RE financing in the country, not only now, since 38 years. So we have given also some suggestions, and fair amount of our suggestion has already been incorporated, what we believe. See, one simple thing I can tell, initial the thought was like 5% provisioning, which is not. It is 1%. And moreover, this guideline is going to be prospectively implemented, that is from 1st October 2025. So whatever our existing assets and all, that is going to be covered under the earlier provisions. Coming back to how it is going to impact, like the new provision will be requiring 1% provisioning during the construction period of the asset. And I think which is quite fair, because during the construction period, the developer is carrying the fair amount of risk, the lender is carrying fair amount of risk, all kind of stakeholders, they are carrying fair amount of risk. So risk, wherever you have risk, you need to have a risk mitigation plan, risk management plan. So this kind of provisioning is not only going to strengthen the construction of the project in the long run, but also enable the lenders to have a comfort when they have to ask certain kind of provisioning, so that their bottom line is not going to be impacted due to any point of time, any kind of project delays or something.
Okay, and Mr. Das, though the guidelines relax provisioning when compared to the draft, but provisionings are still expected to increase. If you could quantify for us how much the provisioning increases for your company?
As I said, this is going to be implemented from 1st October 2025. And this will be largely impacting the greenfield projects. In my earlier talk, when the 5% issue was raised, that point of time I had also clarified, again I'll reiterate, we are NBFC covered under India's where expected credit loss methodology of provisioning is there. Even today in India, banks are not adopted that ECL provisioning methodology. So those project finance companies, those who are not coming under India's provision, not having ECL, they may having a bigger impact. But as far as we are concerned, our ECL provisioning by and large used to be slightly higher than the normal banking mathematical provisioning what we used to have earlier. So we had roughly around 150 crore question earlier. And if you see right now, if you implement also the kind of size what we are having and kind of growth what we had established in the past and what expected to grow, what we have already notified, we don't think there will be a gap between our provisioning and the RBI methodology of making any provisioning. We have enough cushion in the past.
Will the hit from increased provisioning impact overall borrowing cost, or will it be a complete pass-through?
No, I don't think. Provisioning, as I said, it will not have significant impact on our provisioning requirement. So I don't know why you are asking that this will impact my borrowing at all. Because we are borrowing from a market with respect to our credit rating and other things. Once our asset quality will improve, rather that will enable us more sense of confidence among our lenders to continue to give us in a competitive rate. That is not going to impact it.
And after total rate cut of 100 basis points in calendar year 25 till date, how much has the cost of funds been reduced and where does it stand currently? And where do you expect it to end FY26?
See, earlier we were not resorting to overseas borrowing. If you see, recent past we had raised through Japanese yen, and that is sub-7. I think it is around 6 something. Exact rate I don't remember. That is quite competitive. And if you see, since 2020 onwards, we had not raised any overseas funding, and rather a couple of old borrowings we had prepaid, paying the penal charges also, because despite all those, the landed cost of our domestic borrowing was becoming cheaper. So our resource team is working in a very dynamic period. So, and we envisage further borrowing from overseas, mostly the greenhouses, green funds, wherever it is available. And we are also waiting for our international rating to happen, which we achieved last year. So therefore, this is the time for us, high time for us to look into global market and look into most competitive overseas borrowing, provided those are going to be proven as the landed cost vis-a-vis what we are getting domestic market, after considering hedging, commitment charges and other charges.
Okay, and Mr. Das, before we let you go, could you help us with the status of Jensol Engineering? We understand NCLT has admitted the company's plea against Jensol. When do you expect final outcome? How much of that has already been provided for?
See, even post our result, I think 16th of April, if I recollect, I had pressed the media for our annual results, and 15th of late night, SEBI had submitted the interim report on Jensol. The 16th itself also, I said that our assets were backed by securities by and large, and this matter is under investigation. In the meantime, we had filed with case with EOW and also NCLT. And our intent is that to get the RP appointed, which we have succeeded in that. So our intent is not go and look into liquidation of the company or something like that. Our intent is to procure, get back control over our assets, because we believe that e-mobility is having fair amount of good business opportunity in the country, and needless to forget that this is the same agency who initiated this breakthrough of e-mobility in the sector. Because of the so-called alleged corporate misgovernance, they ended up in this kind of thing. Since the matter is under investigation by our internal investigation committee, and it will not be prudent on my part to disclose anything here now and not to influence their decision on my statement. So they will be coming out of the report, and SEBI had given interim report. Other lenders are also doing their own investigation.
Mr. Das, appreciate your time. So glad you could join us. Thank you for your thoughts. I'm just going to mark markets here. The small cap index is almost in the green. The mid